that we have in a quality study, and of course also about specifically the India Cares package. But it's been a very exciting journey, I'll be very honest, across all these countries, across all these years.
It's indeed a very exciting journey, I must say.
Thank you. Thank you so much. I think I can see my colleague Anu. She's come on the video. I'd just like to introduce. I'd like to introduce Anu as well. She's the product head for iXBRL, the particular product we have for European issuers, and also the director of quality at iris, a very seasoned hand. She'll be running most of the show, apart from my kickoff.
Hello.
Nice to meet you.
Very, very pleased to meet you. And thank you so very much for accepting our invite.
No, thank you so much. It's a pleasure for us to be part of this initiative. At the end of the day, it's a we are working for the same goal, I would say.
Correct.
Our purpose is primarily to promote Indian businesses abroad, and you're also doing the same way.
Absolutely.
I suppose as far as bilateral trade between the two countries is concerned, of course, it's not restricted to two countries. It's more of a multilateral engagement. But this initiative is definitely very encouraging, I must say.
Absolutely.
Are we able to hear each other clearly?
Yes, I can hear you loud and clear.
Okay. I can hear you slightly less loud, but I'm also slightly older than she is.
Oh my God.
I can hear you, not as loudly. Not sure. Can you hear me okay?
Yeah, I think the voice is okay, but sometimes it breaks. I don't know.
Okay.
So maybe that could be one of the connection issues. So, but I suppose it should be okay. I think I will try to be as loud as possible.
We can hear you, sir. We can hear you loud and clear. In fact, we are 5:30 and we are live on YouTube as well. So
that's good.
Yeah.
That's good.
Is it time, Anu? Is it 5:30?
Yes.
Okay.
You are ready to start.
Wonderful. Wonderful. Okay. So, well, very, very good afternoon to everyone here. Very special, warm welcome to Mr. Sunil Dhami, Second Secretary at the Embassy of India in Sweden. We are absolutely honored and privileged to have you here with us. I also would like to welcome my co-panelist, Anu, who is the product head for iXBRL and the director of quality at IRIS. Heartfelt welcome to everybody who's here with us today, spending the next hour or so with us, both through this Zoom meeting as well as through our live YouTube streaming channel. So the way this next hour will go is I'll just be roughly setting the context to what is to follow, and introduce our credentials, talk specifically about the ESMA-ESEF mandate and XBRL as a standard. I will then hand this over to my colleague Anu, who will focus on a research study that we have done. We will not go into tremendous detail, but high-level findings basically on the back of the ESMA-ESEF mandate. So a study of European companies. There will be a focus on Swedish companies, of course. We will then move on to, I guess, what's of interest, especially to small companies in Sweden, which is the India Cares package or initiative. Mr. Sunil Dhami will kick it off and kind of set the context to it. And then my colleague Anu will walk through the specific details of the package or what's on offer. We will be open to questions, any questions through the session, at the end of the session actually. And if we are out of time, or if you don't have questions now but you have something later, absolutely you can feel free to contact us at any point in time. So with this little preamble, let me just kick off things. I hope you can see my screen clearly. So I'll set the stage with just walking through a little bit of background credentials about who we are. And before that, of course, the ESMA-ESEF mandate, which is the reason we are here today. So ESMA, as we know, is the European Securities Markets Authority. And the ESEF mandate essentially requires all listed companies going forward not to submit their annual reports in a PDF format, but instead to move to a machine readable format called XBRL, or specifically iXBRL. So essentially the reports that now are going to be accessible for listed European companies going forward will have a human readable layer, but will also have a machine readable layer. Now, in order to convert reports into this format, of course, what companies will need is some kind of solution or software to help with this. We'll need IFRS and accounting expertise, which exists with most companies, but also a knowledge of the ESEF taxonomy, and also XBRL technical expertise to get the XBRL syntax correct in the reports that they file. A little bit about our credentials. My name is Deepta. I am the co-founder of IRIS. IRIS is a company that has been in the open data standards space, and specifically in XBRL, actually for over 15 years now. We have a footprint in over 36 countries with a number of regulators as well as enterprises who use our solutions as they move along their digital journey or their open data journey, again, specifically XBRL. We work with stock exchanges, business registries, central banks, name it. And we have processed literally millions of filings, both directly and indirectly through regulators and directly with enterprises in this space. We work with a large number of partners that also includes many familiar names that are accounting firms across the world, as well as with IT companies. One of the things is that we are incredibly passionate about what we do. We believe that open standards and digital reporting literally can transform the world. You know, it can make information discoverable, it can make information simpler to access, easy, and the quality of what we do shows up both in our products and our services and in third-party independent quality rankings. So in those countries where rankings are available, for example, like in the case of the US, you will, we as a company and our solutions consistently kind of are on the top position. This is just a visual representation, honestly, of the countries that we are in. Greens is where we are, and we have a team of over 300 XBRL experts who have rolled up their sleeves and gotten into the depths of the standard, of both consulting, solutions, services, the gamut. This slide actually is, just talks to some of the logos that we have as clients. The top is clients as well as partners. The second is specifically clients that we have, which are large logos in Europe for the ESMA-ESEF mandate. We have many more actually, but Colruyt is the largest retailer in Belgium. NL is the second largest energy firm in Italy, Endesa in Spain, Nordicon, etc. The third, fourth, and fifth are companies that we have that are users of our solutions and services, Iris Carbon, across the world, including in the US, the UK, South Africa, and India. So, this is kind of the credentials. And just before I turn this over to my colleague Anu, I wanted to spend a minute just talking about XBRL itself, this standard that ESMA is mandating or bringing in. Essentially, when companies start moving to open data standards or digital reporting standards, they will see a large number of benefits. This, the benefits are not just for the regulator. The minute you have information in a machine readable standard, it does three things. One is machines can start reading that data as well. Automatically, what that means is validations can be built in and actually are built in to the XBRL standards and specifications and taxonomies so that the quality of the data is automatically improved right at the time of the report preparation. So, one of the things that it does, and this is a benefit for the regulator, but equally for the preparers is that when you move to an open data standard, the quality of your data starts improving simply because of the validations that are intrinsic in a standard like XBRL. The second thing is that when you move your data to a standard like XBRL, an open data standard, it is much easier to read the data. And that means that it is much easier for stakeholders like investors, like analysts, like lenders, etc., to start consuming that data. I'll give you two very simple, very practical kind of direct benefits to issuers by moving to a standard like XBRL. One is close to home for you. It's in the Netherlands. There is a consortium of banks in Netherlands who give loans at cheaper or lower interest rates and also process the loans faster. That means the yes/no decision happens faster. And if it is a yes, the loans come at a cheaper rate if the potential lender is submitting the loan application information in XBRL. Why? Because it is easier for those banks to actually consume that information and make the decision quicker. Similarly, an example from the US many, many years ago, there was a small cap company. And for small companies, getting kind of visibility or getting analysts to track them is always a challenge. This small cap company voluntarily converted its reports, quarterly and annual reports, into XBRL and started publishing it on its website. Guess what happened? The analyst coverage increased from 1 analyst to 5 analysts over the course of a year. Pretty tremendous and dramatic. There are many more benefits. For example, the multilingual capabilities of XBRL as a standard. So there are many benefits to XBRL as a standard. What we will focus on in the first part is just quality of reporting, how it can improve by the simple act of following ESMA-ESEF's phase 1 mandate, and that's what Anu will present. And then phase 2, which is of course exciting, especially for small companies, is a special offer that we have for small companies, because we believe that when you move to the standard, you're not just doing it to comply, you will actually be able to see a lot more downstream benefits too. So this brings me to the end of the setting the context. And with this, I would like to turn this over to Anu to take it forward by presenting our quality study. Thank you.
Thank you. Hello and welcome everyone for today's webinar. I'm just going to share my screen here and we can start once you start seeing my screen. Okay. So in the next 20-25 minutes or so, we're going to speak a little bit about how important is this coming regulation, which is called ESEF for every company in Sweden, because from a regulatory perspective, there are more compliance requirements that you need to meet. And in fact, with these ESEF compliance requirements, you could also leverage the use of structured data and iXBRL for your own benefit. So we actually did a study where we have analyzed close to 700 listed companies in Europe. And the next 20-25 minutes, I'm going to focus on why the quality of tagging is important, why this whole exercise is going to be important for a company as a whole. So first of all, why should anybody take quality seriously? For two simple reasons. I think there's some disturbance. I think there are some panelists who are not on mute. I'd request the panelists to go on mute, please. Thank you. So there are, in the first place, why should somebody take quality seriously? The reason why every company should take quality seriously is because A, regulators take it seriously, and B, investors take it seriously. So XBRL as a standard has been there for over like 16 years. And many countries have actually benefited with the standards. So most of you have heard, big scandals like Enron in the US and more recently Wirecard in Germany. Had there been XBRL, such scandals or such malpractices in reporting, etc., would have been identified much, much earlier. So with XBRL, investors, regulators can go ahead and analyze data. They can look for information much quicker, much faster, and also they are able to bring a very strong financial ecosystem. Secondly, any investor invests in those companies where the financials are very sound and where the numbers are actually even accurate. So just imagine if an investor finds a mistake in your annual report or any of the company's annual report, their whole trust in the numbers goes away. So therefore, the key driver for any investor is to go ahead and look for accuracy in reporting, because that is the choice that they're making. And once the trust of the investor is gone, it's kind of very, very hard to get it back. So therefore, it's kind of very, very important that whenever you are publishing your annual reports, it's kind of very critical that what you're reporting, A, is accurate, and B, is kind of very precise. So now moving on to the next slide, now that we know that we've seen like a lot of scandals in many, many countries, we kind of see that mistakes are bound to be made, or some mistakes could be just carelessness. Due to carelessness, some mistakes are intentional. So for example, some examples of where companies actually got their numbers wrong are, like, for example, GE. So GE is a very large company in the US. So in their 2015 annual report, which got published with the regulator, which is the US SEC, so they had reported one number as 105 billion. So this is the amount which was being invested outside of the US, for a long-term period. And they reported as 105 billion in their annual report. However, in the XBRL, they had reported as 105 million. So you can kind of see the impact, what it would have on anybody who's taking a look at the numbers. So similarly, there is another bank called Axis Bank, which is like a large bank in India. So they had represented one particular number where they had missed, many crores in their annual report. And when we found out this with XBRL, they kind of responded saying that this was a typo in their annual report, which ran into many crores of Indian rupees. So while there could be some which are not deliberate, there are some which are intentional or deliberate. For example, again, Enron scam, which was there in the early, almost like 2 decades ago. So it was kind of very clear that Enron was not reporting in the right manner. They had kind of, the financial reporting systems, the numbers that they were reporting was not accurate. But unfortunately, these numbers and these reports were audited numbers. So there is a big question mark there, even again, that, when things go through like a process like this, how do you trust and who do you trust? So similarly is the case with Deccan Chronicle and the most recent mega scam, which has shaken, Germany and Europe as well, which is the Wirecard. So with XBRL, what's going to happen is that regulators are able to go ahead and see information, get information much accurately. So this is just like, these days, wherever we go, there are like CCTV cameras that keeps a watch on all of us, right? So XBRL is that lens using which regulators can look information, and they can get information with a click of a button. So therefore, due to these reasons, it's kind of very important that you make sure that the reporting that you have, especially in this new reporting format, is even more accurate, because in PDF, even if there were mistakes, probably the regulators must not have noticed it. But once the information is in a machine readable format, regulators will be able to identify any kind of inconsistencies in reporting much faster. Now we'll speak a little bit about the study which we have actually done. So we actually, as a company, we are very passionate about XBRL as a standard. So we've been kind of analyzing companies all across the globe to see what type of reporting they're doing, how are the XBRL filings shaping up. So we've been analyzing companies in USA, in South Africa, in UK. So we also conducted a study in Europe, especially since the ESEF reporting is coming up. So we did kind of analyze 700 odd companies in Europe by converting these reports into inline XBRL. And we also wanted to address, how will this new reporting format help companies, right? Is the quality of disclosures good enough? Or can iXBRL improve the quality of filings? How can a company go ahead and make sure that they're complying in the best possible manner? Is there a role of a software in ensuring what they're submitting is correct or not? And many questions like this. We'll continue to go ahead and monitor every company in Europe as well once the mandate kicks in more actionably. But so far you can see that we've already covered 20% of the companies in Europe, and which will continue to do so. So what did we actually do? So we kind of took the sample of 700 companies, which comprises of close to 20% of listed companies. And we also covered a minimum of 10% of companies in every country in Europe. And this sample actually consisted of both small caps and large caps because we wanted a very balanced representation. And in some countries, we also expanded the sample much higher. And specifically with respect to Sweden, we have actually covered 31 companies in our study. And what did we do? We identified these 31 companies and we actually downloaded their annual reports from their websites. And we converted the annual report into inline XBRL using our solution. And we created extensions where it was needed. Once the iXBRL was created, we had gone ahead and validated these iXBRL documents against a validated tool that we have. So once the validator was run, we found two types of results. One were rounding off mistakes, which were ignored. And further, there were some genuine reporting mistakes that we had further taken up for analysis purposes. In terms of efforts, what did it take for us? You can see that there was like a lot of effort which went into this. And you can kind of imagine the amount of hours and the amount of time that went by. So in quick summary, we went ahead and analyzed companies in every country in EU, which consists of 27 countries, and 707 companies were analyzed across 27 industries. There were 50 experts, XBRL experts from our side who had gone ahead and created this iXBRL document and further analyzed. There were close to 1 million concepts that we have tagged, and it took about 10,000 man-hours. So this is the effort that has gone into the study. And here are how the results look like. So out of the 707 companies that we actually analyzed, there were 66 companies which had genuine reporting mistakes. That's quite a lot, almost close to 10%. And if you take a look at Sweden, the numbers seem to be slightly better. So out of the 31 companies that we have analyzed, there were about 2 companies which had mistakes, which comes to about 6% of the entire sample. And which are the companies that we even analyzed in Sweden? So this is like a quick look of some of the companies that we analyzed. So for example, Investor A, Orexo, we can see like a New Wave Group, Hexagon, Swedish Match, etc. So the idea is not to tell which company has got wrong, but this is to kind of show you that a substantial set of companies have been picked from Sweden, which is also representing the small caps and the large caps. Now let's take a look at what the mistakes were. So the highest number of mistakes, which is close to 74% of the mistakes, were actually totaling mistakes. So what we mean by totaling mistakes is that we all know that a 1 + 1 is equal to 2, but there are companies who are reporting a 1 + 1 is equal to 5, which is kind of absolutely incorrect. The next highest mistakes is a category which is called mismatch values, which accounted for 22% of the mistakes. What we mean by mismatch value is, as an example, let's say you have cash and cash equivalents reported in the balance sheet, let's say 100 million, but in the cash flow, you report it as 107 million. So you cannot have two different numbers for a single concept being reported. So that was mismatch values. And next, 3% of the companies had incorrect signs. So this is like numbers which are supposed to be reported in positive, being reported as negative, and vice versa. And similarly, the last category was 1% of the companies got their dates wrong in the annual report. We'll show you some examples of this in a little later. And where were these mistakes? You'll be kind of surprised, or like, it's kind of shocking to see that 52% of the companies or the mistakes were actually in the cash flow statement, because the cash flow is typically a little complex statement because, there are a lot of positives and the negatives, etc. So majority of the mistakes, you can see 52% were in the cash flow statement, followed by equity, which is also another complex reporting statement, by the way. This was then followed by balance sheet, which is accounting to 11%, and comprehensive income statement, and then finally income statement. And we also went to take a little deep dive to see which companies had the mistakes in their report. Are these companies which are the big ones? Are the companies small ones? So typically what we've seen in many, many countries is that, usually it's kind of a notion that it is the small cap companies who do not have good processes, good reporting, framework, etc., due to which there could be mistakes. But what actually came as a shock to us is to see that in our study, it is about overall 61% of the companies that had reporting mistakes were actually the large caps and the mid caps and not the small caps. And the remaining, 39% were actually the small caps. So this gives a little ray of hope even for the small caps, but it is also a concern or a point to worry for the large caps and the mid caps to see that in spite of having like strong processes, etc., what is it that they're kind of missing on? And further, what we also went to see is that which industry had the most mistakes. And what we found out was that the banking, insurance, and the financial services sector had the highest mistakes, followed by consumer goods, manufacturing, real estate, and other industries. So seeing these numbers, it's kind of very clear that the complexity of reporting, which is much higher in industries such as banking, insurance, financial services, utility companies, real estate companies, their reportings are usually complex, and therefore we could see a direct correlation between the complexity of the disclosures and the number of mistakes that were there in these sectors. We also went on to see how aligned is this ESEF taxonomy for companies. And here are the different sectors that we have actually analyzed. And you can see that out of the total number of tags that we have already gone ahead and created across these companies, the highest extensions. So what we mean by extensions is that ESMA actually says that every company has to go through the taxonomy and has to pick tags from the taxonomy as far as possible. And where companies do not find appropriate tags, they are supposed to create their own custom elements called extensions. And ESMA also says that the number of extensions should be as least as possible because then information is not comparable. But what we saw as a part of the study or the results of the study is that companies or firms who are in the banking, insurance, and financial services sector, real estate sector, and utility sector had the highest amount of extensions, which is again something you need to kind of watch out for. So if the participants of today's webinar are in any of these sectors, you may want to watch out what extensions are being created by your company, or if you're outsourcing it to a vendor, you may want to take a closer look. It's also very important you see these extensions because otherwise you wouldn't know what is your service provider even creating. And as far as possible, the extensions should be the least. So therefore, it's kind of very critical that you're able to see what extensions are being reported. And what did we do and how did we find out these mistakes? So like I said, we had gone ahead and tagged these reports and we ran these results or the iXBRL output files through a validator. And the validator gave us these results. So we'll show you some examples of how did we identify this. The first category of mistakes that we spoke was about the totaling mistakes, as you can see here. In this particular annual report, you can see that this is the cash flow statement, and the company has reported a net cash generated from financing activities, which is 181,000 euros. But actually, if you take a look at this, the numbers do not even match up. So the total should be ideally a minus 18. It's a 90 and a 43 and an 80. It should be a minus 18. So when we tag this information, there is a check in XBRL, which is called calculation check, which checks for accuracy in totals. So when we run this check, the validator immediately threw out an error showing that the actual number which is reported is 181, whereas the number should have been a minus 18. And therefore it shows an instant trigger that there is a difference. Moving on to the next category of errors, which is the mismatch values. In this example, you can see that this is an income statement where the company has reported a profit for the year 10,187,228. And the company has bifurcated the same profit between owners and non-controlling interest, and they have a total. In this case, ideally, these two totals should be matching. But when we ran the validator, we saw that there is a warning or an error which showed up here, which shows that there is a duplicate amount, meaning there are two different numbers which has been tagged for a concept called profit loss. So this is kind of really shocking to see that though these are audited reports, triggers like this never was there earlier because everything used to be like a very manual process with the PDF files. So now you can see that once your information is in a digital reporting format, all of these gets flagged off instantly. Moving on to the next category of errors, which is incorrect signs. And this is an example of, again, an income statement. The company has reported operating profit for the current period as 27,308. They have some expenses, which is close to about 1,000 euro. Even had they gone ahead and reduced this number or the total should have been a profit before tax of 26,406. But you'll be seeing here that the company has reported a loss. This is like one of those terrible mistakes that no company would ever want to report. But unfortunately, instead of reporting a profit of 26,000 euros, the company has actually reported a loss. You can kind of imagine the impact that, if analysts are tracking your company, if people are watching your numbers, and if they find that this is like a loss-making company, they may not want to kind of, invest, right? On the other hand, if they find out that this was a reporting mistake, that's even more terrible. Anyways, so this particular mistake was actually found again through the same calculation check where the validator threw an error saying that this should be the reported value. This is the actual correct value that needs to be there, and therefore there's a difference out here. Similarly, the next category of error, which is incorrect date, you can see here that this is again a consolidated cash flow statement. When we tagged these two columns, there was again mismatch value, which showed that there can't be two numbers for one reporting period, which sounded a little surprising. But when we took a look at the annual report, we saw that this company has reported the same period, for both the columns, which is again, probably a mistake that they never noticed. So while these are some of the examples of how some of the mistakes get identified when information is in a digital reporting format. So now that we've seen the power of XBRL and what can it do from a regulatory reporting perspective, it's kind of very important that as a company, you're fully prepared for this mandate. And that's the reason why we wanted to kind of show you how do these things get highlighted when it comes to a report in a digital format. So this is actually not to scare anybody, but this is to kind of give you the right kind of pointers that you could go ahead and consider while you're making the right choice of a software vendor or a service provider. So when you are going ahead and starting with your ESEF evaluation process, one thing that is very important is to make sure that no matter whether you're outsourcing or doing this yourself, the software that you'll be using should have a validator integrated that can go ahead and run all of these validation checks. So if there is something which is incorrect, something which is not being tagged, which is supposed to be tagged, the software must be able to throw all of this for you. And another important point is that since the whole financial reporting process is a collaborative one, and of course, from a preparatory perspective, not just that, now with ESEF, what is also important is that your auditors also need to audit the ESEF project, which means there are internal stakeholders involved. Now there are external people also. So if you have a software which is collaborative, life is going to be very easy because everybody would be working on one single software, giving you full visibility and control. And there are certain software certification programs, which is actually offered by the global consortium, which manages XBRL as a standard. It's called, the consortium is called XBRL International. And a lot of softwares get certified for complying with XBRL rules. So in your evaluation process, check the vendor that you're evaluating if they have certification from XBRL International. There was also field test conducted by ESMA, about 2 years back. So there are many softwares that have got and passed through these field tests. So also check if the software that you're evaluating have passed both the XBRL International certifications and also the ESMA field trials. One of the other important things as part of the ESEF overall mandate is that many companies are actually focusing on getting the right tags, choosing the right tags, which is, by the way, very important. Apart from choosing tags, what is also very important is something called as a company taxonomy, which is like every company is supposed to prepare its own taxonomy. And these set of files is what will be submitted to the regulator. Therefore, it's kind of very critical that as a company, you're able to view the company taxonomy. If you're being told that the company taxonomy is somewhere in the background, it is automated, etc., and you're not able to see it, that's not a good thing at all, because you cannot sign off on something that you do not see. So please request your service provider or any vendor that you're kind of going ahead and evaluating to able to show you the company taxonomy, to be able to show you the extensions right in front of you. So these are some of the things that are kind of very important, and having a good software and also a provider with the right experience will actually help you with complying with this upcoming mandate very well. So it's a matter of planning and also a matter of process, how you put in place. So you need not have like a high expertise of XBRL because it's a new reporting regulation that's kind of coming up. But with the right set of products, right set of services, and also having the right team internally, you need not be an expert, but with the right mix, we are very confident that each of the companies in Sweden will be able to go ahead and comply with this mandate. So With this, we come to actually the end of the study. And now I'd like to go ahead and request Mr. Sunil Dhami, who is from the Embassy of India from Sweden, to actually launch our India Cares initiative. Over to you, Mr. Sunil.
Hi, good afternoon. Am I audible?
Yes, you are.
Okay. Hi, good afternoon, everyone. Thank you so much, Deepta and Anuradha, for giving so much information about the software and the present day accounting systems are taking us to the regulatory framework. It's absolutely, for me, it's a wow moment to understand how the reportings are being managed at the regulatory level. I'm deeply impressed by your presentation of your particular references to studying the 27 countries, 707 companies, 27 industries. In Sweden, making an assessment of 31 companies, of which 2 were gone wrong. And of course, there are many regulatory compliances that are being made easy by the iXBRL. So I'm deeply impressed to see this your presentation, and I would like to thank you. My thanks are also due to Mr. Swaminathan, who is unfortunately not available today.
Mr. Sunil, I think we are losing you. Ankita, can you hear Mr. Sunil?
Am I audible? I think the connection has gone out.
Yes. Now you are, sir. You're audible.
After my thanks to Deepta, Radha, and Mr. Swaminathan, I would like to begin with, I would like to convey my greetings to all the participants present here today, and all the participants to this webinar through the YouTube. Welcome to this wonderful webinar for the benefit of all the business in Sweden. It is a great happy to see a strong Swedish participation from companies like Epiroc, Electra, Kindred Group, Invisio Communications, Ferro Nordic Machines, among others. India Cares initiative has been launched by IRIS, an Indian regulatory technology company and a global provider of software products for compliance, data and analytics in the structured data space. IRIS is a specialized integrated HR solutions, training and skills assessment agency supporting businesses by providing integrated human resource services. Friends, India and Sweden enjoy a very robust and cordial bilateral economic and trade relationship. The landmark visit of Honorable Prime Minister Shri Narendra Modi to Sweden in April 2018 extended vision to overall India-Sweden bilateral and trade relationship. During the visit, India and Sweden signed the joint declaration on innovation partnership for sustainable future and adopted the joint action plan that provided the framework for taking forward concrete cooperation between the two countries. Both India and Sweden are working together to effectively utilize complementarities in many sectors, including in innovation, smart cities, sustainable urban development, healthcare, water and waste management, e-mobility, clean technologies, to name a few. In September 2019, both India and Sweden announced launching of the leadership group within the industry transition track at the UN Global Climate Summit in New York. This initiative will provide a platform for governments and private sector with opportunities for cooperation in the area of technology, innovation. The co-leadership group and business leaders aim to work together in the industry towards net zero carbon emissions by 2050. I'm delighted to see the upswing in India-Sweden relations, including regular high-level bilateral visits and the exchanges with growing sectoral cooperation from both countries. In October 2019, the 19th session of Indo-Swedish Joint Commission for Economic, Industrial and Scientific Cooperation was held in Stockholm and was co-chaired by Honorable Minister for Commerce and Industry, Mr. Piyush Goyal, and Honorable Minister for Foreign Trade and Nordic Affairs, Ms. Anna Hallberg. During his visit, the Commerce and Industry Minister invited Swedish investments into India and offered to facilitate setting up of Swedish investment enclaves with the plug-and-play infrastructure. The visit of their Majesties, the King and Queen of the Kingdom of Sweden to India in December 2019 was a historic one and provided a new dimension to our bilateral relationship. Their Majesties were accompanied by the Swedish Minister for Foreign Affairs, Minister for Business, Industry and Innovation, a 100-member strong Swedish business delegation apart from official members. In addition, we witnessed a series of high-level visits in 2019, including that of Swedish Minister for Health and Social Affairs and the Minister of Jal Shakti from India, Minister of Road Transport and Highways, and MSMEs from India, apart from other high-level engagements between the two countries. The bilateral trade, a total of US $1.86 billion. While we do not have the services trade data for FY 19-20 available with us, the bilateral services trade between India and Sweden in 18-19 stood at US $2.65 billion. This is much below the existing potential of the two countries, and we need to work together to take the bilateral trade to new highs. On the investment side, at present, there are over 200 Swedish companies, second largest investment with an FDI equity inflow of US $1.63 billion from April 2000 to June 2020. Swedish companies have traditionally been making in India for many decades and generate over 200,000 direct employment and 1.6 million indirect jobs in India. Sweden is one of the top 5 countries to make in India. Over the last decade, Indian investments in Sweden have steadily been increased. The majority of Indian companies are from the ICT sector, followed by manufacturing. The first wave was led by large IT companies such as TCS, Wipro, Infosys, L&T Infotech in 1990s to early 2000. A second wave of IT companies commenced a decade later, led by Mahindra Satyam and acquisition of HCL Technologies of Volvo IT and its 900 employees. Indian pharma and biotech companies like Biocon, Kemwell, Cadila Pharma have formed collaborative relations in Sweden. In April 2019, Kalpataru Power Transmission acquired 85% stake in Linear Montage. Aditya Birla Group acquired specialty pulp maker Domho Fabric, and the list goes on. Presently, there are over 70 Indian companies in Sweden directly employing an estimated of 6,000 people, with both HCL and TCS having more than 1,500 employees each, according to Business Freedom. Friends, coming back to India Cares initiative, as you are aware, the European Security Markets Authority, ESMA, has issued a mandate requiring all companies listed on stock exchanges in EU member countries to file their annual financial statements in the iXBRL format. To create files in this format, companies will require a special software, that is iXBRL. The India Cares initiative proposes to provide the software for free to micro, small, and medium enterprises in Europe. The software valued at euros 20 million would allow companies listed on the stock exchanges of any of the 27 EU member countries to comply with the new ESMA regulation and file their annual financial statements in the iXBRL format. Specializing in software products for regulatory compliance with users in 36 countries, Iris software iFile is also used by regulators, including by the Reserve Bank of India. Other clients for iFile include regulators from Singapore, Malaysia, Argentina, North Macedonia, Saudi Arabia, and Jordan. In the Indian context, we have been one of the early users of XBRL, with the Bombay Stock Exchange having adopted XBRL format way back in 2008. Today, all listed companies in India report their financial results, both quarterly and annual, to the two stock exchanges in the XBRL format. This was followed by the Reserve Bank of India, whose implementation of XBRL started around the same time. Today, banks, NBFCs, and cooperative banks also submit their data in XBRL format. Subsequently, India's business registry, which is part of the Ministry of Corporate Affairs, also adopted XBRL for reporting by companies to Registrar of Companies, as we refer to our National Business Registry. Our insurance regulator, IRDA, has also embarked on a roadmap to adopt XBRL for insurance report. Here, XBRL has been used in other areas, including even sports statistics. India is one of the few countries in the world where utility of XBRL has been clearly demonstrated. That is exactly why RBI received global recognition for its implementation of in the form of an award from XBRL International. Today, the availability of granular data in XBRL has helped the central bank tighten its supervision of the banking system. The quality of data available with RBI is of a high order, allowing them to intervene in a timely fashion to prevent any challenges to the integrity of the financial system by any errant player. Friends, I'm very happy to launch the India Cares initiative here today. It will benefit the micro, small, and big caps listed in member states. Honorable Prime Minister of India, Shri Narendra Modi, has always advocated Vasudhaiva Kutumbakam, which means that the world is one family. And in line with this, in your happiness lies our happiness. We sincerely hope that the MSMEs listed on the EU stock exchanges will be able to benefit from the India Cares initiative. With these words, I would like to compliment once again all the stakeholders for organizing this event and convey best wishes on my and on behalf of the Embassy of India to all the participants. Thank you very much.
Thank you so very much, Mr. Sunil, for inaugurating and launching the India Cares initiative in Sweden. So for the benefit of all participants, maybe I'll quickly walk through what this entire initiative is about. So like Mr. Sunil just briefed, so this India Cares initiative is for all the small cap companies. So what we define by small cap companies are companies who have a market cap of less than 100 million euros as of 1st June 2020. And as part of this overall India Cares initiative, what we are offering is a free iXBRL document creation in order to help small cap companies comply with the mandate. This is applicable for first year of the mandate, for the first year where the entire product or the license and the services, they can be chosen for free. So you could choose just the license or you could choose our services. No matter what you choose, the first year, there's kind of zero cost. And again, there is nothing nothing binding here. So no conditions, no constraints, no hidden costs, etc. And the reason why we are actually offering this India Cares initiative in Sweden is because we understand that this whole COVID has had a huge impact on, of course, all companies, but also the small companies the most. It's hurt the small companies the most. IRIS is also a listed company. We are also a small cap listed on the Bombay Stock Exchange. So we completely know how hard it is to kind of run operationally, etc. And therefore, from an XBRL perspective, what we've seen is that the benefit of XBRL is humongous, compared to the cost. But we've kind of seen that in some countries and some companies, small companies saying that, already we have like so much of trouble. So this is like an additional compliance cost. So for all companies, what we want to kind of convey here, the special message, especially for small cap companies, is that the overall benefits that you receive from XBRL is much more than the cost. So for example, like Deepta mentioned some time ago, there were companies who were reporting PDFs, paper-based, etc. But the minute they switched into this digital reporting format, investors and especially market analysts started seeing those companies more seriously. And there was like a higher reach of market analysts who were kind of following and tracking such companies. So in summary, we think that this new initiative, which ESMA has kind of gone ahead and introduced in terms of the ESEF mandate, is a great starting point for all companies to go ahead and embrace the standard. And we are fully supporting the small cap companies in Sweden to go ahead and leverage this standard and comply with the standard. So this is like a small helping hand from IRIS for the companies in Sweden, especially the small cap companies. So with this, we actually come to the end of our presentation. If anybody has any questions, you can leave us a message in the little chat box. We will pick up your questions. Or if you have more specific questions around the study or the offerings or the India Care package or on our product solution and services, feel free to send an email to info@iriscarbon.com. And I repeat, you could drop an email to info, which is info@iriscarbon.com. And we'll be very happy to pick and answer all of your questions. So I do not see any questions on the Q&A. So I think, we can wind it up here. So once again, thank you so very much for all the participants who have joined this webinar, both on the Zoom link and also on the YouTube channel. And a very special thanks to Mr. Sunil Dhami, who is the Second Secretary, Embassy of India from Sweden, who's joined in online with us. So thank you so very much, sir, for joining in the event and also for launching the India Care package for Sweden.
Thank you so much and wish you all the very best in your endeavors. Such a wonderful presentation and such a wonderful product that has been launched for the betterment of the companies for their compliance, regulatory compliance. So I hope many companies from Sweden will be able to take benefit of the initiative. Very wonderfully, I would say, launched by IRIS. So our compliments to you and to your entire team. Thank you so much.
Thank you so very much, sir. Thank you. Bye-bye. Thank you.